Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Well, the perspective of the gold market currently stands extremely interesting. In today's fundamental report, we have prepared, I suppose, very good background and a very good analysis that shows what particular we should keep an eye on and what we expect should happen within the nearest 3-6 months probably. It also discovers some factors that are not widely spreads in the mass media that could make impact on the sentiment on investors, and actually impact of the first factor we already see. So once market has shown minor bounce, as in gold and stocks, it's more and more opinion have appeared that probably the situation starts normalizing, inflation is rising not as fast as it was rising previously. That probably could make Fed to be not as aggressive on the interest rate change. But to make this conclusion, you have to take a look what the reasons for this pullback. And if you will dig it a bit deeper, you will see that in fact nothing has changed. It's just the Fed has pumped some liquidity on the markets. So if previously, since the beginning of the year, Fed has dried approximately 400 billions, now in recent couple of weeks it returns the half of this money back on the markets, and that support the demand for different assets. It's difficult to say the reasons. Maybe it's some psychological effect that should stop some panic sentiment on the market or something of that sort, and that should provide some opinion in the minds of the investors that Fed is doing everything correct. It's difficult to say, but you could see effect, and in reality, sentiment stands and ideas of the investors stands too far from the reality that we have in the markets. Additional factor that could disguise the overall situation even more is that big cash balance of the United States Treasuries in the Fed account. And since we estimated that it stands right now net outflow from the United States Treasury bonds, also United States will get the significant budget deficit around 600 billions by the end of the year. They have to close it by something. If nobody buys the debt, the only source of the closing this gap with the liquidity will be the cash of the Treasury. That will be actively used in the coming 3 months to close these gaps. So we will see it. But at the same time, the using of this cash will disguise the real problems, will hide the real problems for the market society, and it will be more and more assurance among the investors that everything goes well and it seems that market is ready to recover. But in reality, it stands absolutely different. So if you take a look at our fundamental report, you will see it. So if you would like to know the reasons and the real deals that we have right now on the background of the markets, I suppose you should read it, because it's really, clearly explain what is going on. Speaking on the technical side, based on these factors that we just have mentioned, gold could move slightly lower. So 17 even area might be achieved later within a few months. Besides, as you know, the summer is actually seasonally bearish factor for the gold. And the combination of these two factors provides some liquidity from the Fed and United States Treasury, supporting other markets and closing the gaps in the budget, forming the positive sentiment among investors. Could press on the gold more, and accompanied with the seasonal factors would not exclude the chance that market will drop more. So as we discussed in our weekly chart and in the monthly chart. In the short term still, before the downside reversal starts, we not exclude the chance that we could get some compounding upward bounce. So it might be kind of the A, B, C, top T pattern on the daily chart. On the technical side, on the gold, in particular on the daily chart, we do not have the clear signs yet. The only thing that we could say is that take a look how market responds on a strong confidence area. We do not see any panic sell-off. We see the market hits it, and just stand flat around it. Probably that might be treated as the advantage for the bulls, because it means that market is coiling around the resistance, which is building an energy for a possible breakout. Additionally, if you take a look at net treasury yields, you could see that on a 10-year yield we might get hand shoulders, and that suggests first the pullback to form the right arm, and then it may be also some kind of the ABCD extension. So that makes us to expect something the same on the gold market, but it's just reversed in an opposite direction. So when the right arm will be formed, we should wait for some pullback here, and when 10-year yield start downward continuation with the forming the target of the hand shoulders, we could expect something of this kind of on the gold market as well, so some kind of the ABCD pattern. And things that we see on the intraday charts, well, mostly doesn't contradict to this. So if we take a look on the fall time frame chart, this is two scenarios that we in general intend to keep an eye on. That's mostly the shape of the price action, but levels might be different. It depends on the swing side. So if swings will be slightly stronger or weaker, so it might be some different levels. But the overall shape of the performance, we expect to see something on this kind. So first we intend to get some pullback. Here it's a bit deeper retracement, while on the treasuries market starts forming the right arm, and then extension should follow. And with this extension, we suggest that it would be better to focus first on our conservative target, which is the completion of the XOP of this initial ABCD pattern around 1886. An optimistic scenario suggests it might be action to this target if we'll get the larger ABC bottom D pattern right to the 1916, and this target stands in agreement with the major daily resistance. So you can see right here. We will see how the situation will develop here, whether it makes sense to focus on the second target, but initially let's keep focus this first one. Retracement to the 1837 is very probable, just because, first of all, this is ABCD pattern, this is OP, and if you'll take a look at the hourly chart, you will see that this area is also the confidence support. So we already discussed in last week, 1833, 1837, together with the agreement with the ABCD pattern. Well, it's very probable to happen. So let's keep focused on this scenario, see how market will behave with it, and bring adjustment on the daily videos as usual.